Okay, so what I did is I actually invited Lester to join in. So maybe as we run in a future session, right, Lester can also chip in and share some of your insights regarding the market. Alright, then if of course if you do intraday, I think Lester can also share some intraday setups. If have that'll be interesting. Alright, I think then what we usually do is similar process like we always walk through what's gonna happen for the week first. Alright, if for those who are aware of what's happening, last week is actually Brexit. Right, and then of course the vote, I think it's all over social media, so you guys should also know that Britain actually voted to exit Euro. And the whole idea is when these things happen, okay, normally it causes a lot of uncertainty in the financial market. And if you look at the wicks, all right, let me just open up that wicks chart for you to see. Okay, I'll also open up the, it's quite slow. I also open up the Forex Factory calendar so you can take a look as to what is happening, what are some of the events that's going to happen for this week. But because of Brexit, right, most of the currency pairs won't be running based on the economic data anymore. But it's really going to be running on risk sentiment, whether is it still going to be risk off or risk on. But from my own experience, I feel that such event is not going to be like one time so short. That means it's still going to drag on. That means it's going to be quite a sustained event for Brexit. It's going to probably take at least another 2 weeks for things to settle down. Okay, so I just show you what the week's chart looks like. Okay, just load the correct chart. Okay. Okay, so if you look at the week's daily chart, right, you can see that it actually spiked up all the way to above 20 because of Brexit. Okay, so overall, this generally tells you that when Wix index is above 20, it's telling you that generally is in a risk-off environment. What it means is that equities market will generally be falling, all right, and you want to look into risk-off currencies, all right. For example, Japanese yen will strengthen a lot and etc. Okay, and with all these things taking place, right? Basically, we won't be focusing too much in terms of what's happening for this week in terms of economic data because most of the currencies and traders will be riding on the sentiment of it, which is really on risk off and still on pound. Okay, so if you look into this week report, I already updated all the central bank analysis. So there are some updates. For example, the Fed previously it was in terms of bullishness. All right, now it's more on neutral. All right, BOE is strongly bearish, so you can see on that. You can click on this link to actually go and read up in terms of all the updated central bank analysis. Okay, so for this week itself, the directional bias is I would say it's pretty clear lah, right? The whole idea here is pound is bearish, and while euro over here is slightly bearish, even though it's Brexit, it's not really about just euro. But what I feel is that if UK can successfully exit the eurozone, a lot of other countries will be thinking whether they should want to exit and become independent as well. Okay, so that to me will affect euro more than actually UK. Simply put, because the economy of UK is not as bad, right? When they achieve independent state, they can actually recover from it. But if let's say the European countries, right, decided to all want to go towards independence, it will affect the eurozone quite a bit. Okay, and that's why I feel that the ripple effect of Brexit will actually continue even for Europe. Okay, so that's what I wrote over here. Euro economy will also be affected the most, right? So we are expecting bearish sentiment on pound to have ripple effects on the euro as well. For pound itself, it's pretty clear cut. Why I'm bearish to it? Simply put, because if you follow the BOE recent BOE monetary statement under the central bank analysis, right? You can also you can also read into what some of the statements that they actually release. In terms of when Brexit really take place, what will possibly happen? Maybe economic recession. People will be hit in terms of labor market and etc. And you can already see how banks in UK are already directly affected negatively. Okay, and what's going to happen is BOE is probably going to stimulate the economy and such. And in order to stimulate those kind of economy, they probably won't increase interest rate for some sustained period. And then what they're going to do is they're going to print more money to actually provide the liquidity in the financial market. Alright, so all these things kind of give the bearish sentiment in pound. Okay, uh, and because of risk of environment, okay, so safe haven currencies like Japanese yen will naturally be strengthened. Okay, so Japanese yen is bullish over here. The whole idea is economy of Japan is still negatively, as in it's still weak, alright, but recently now because of sentiment driving the market, it'll be bullish sentiment. Okay, the key idea here you want to focus on is, yes, Japanese yen is going to ride on the risk off environment. The whole idea is, then the question you need to really keep in your mind is, will BOJ intervene? Okay, because BOJ Kuroda already mentioned that he doesn't really like the yen to be strengthened so much in such volatility market. Okay, so this is something that you just need to take note of, whether BOJ will actually intervene. But as long as it remains status quo, that means the market environment is still risk off, BOJ is still standing, not doing anything, we can continue to expect Japanese yen to be bullish. Okay, USD, you also have some form of bullishness, simply because USD is still a safe haven, though it's not as popular as Japanese yen. Alright, so that's why it's just slightly bullish. Right, and if you compare among all the currencies, definitely dollar is still one of the more positive one, right, in terms of their economic as well. If you look at the commodities currency like Aussie, New Zealand, and CAD, okay, Aussie and New Zealand are neutral, though they are, I would say, they are still, people are still actually looking into it simply because of the carry trade in terms of interest, but because of uncertainty in the financial market, uh, this kind of currencies will tend to be affected negatively. Alright, but Aussie is slightly more challenging to interpret, because during uncertain time, commodities like precious metal, including gold and silver, will rally, and because of that rally, Aussie will also get some positive note from there, right? So when it's tough and it's uncertain, not very clear in terms of which direction you want to have a bias in, normally we put the neutral. So we tend to avoid having a directional bias for that particular currency. Right, so what I wrote here is best to avoid this commodity currency, similar for Kiwi. Okay, but in terms of Canadian, we are pretty bearish simply because of oil weakening. Okay, oil weakening can prices of oil weakening can also be attributed because of the strength of dollar. Okay, so these are some of the things that it's during this time that I can really share with you how sentiment is important in driving the market. So you need to understand, because of certain things happening, currency market will move in a certain way as well. Okay, so for in terms of all this currency news analysis, it's not as important as the normal times, alright. But having said that, you must also be aware of them. Okay, because overall in a longer term period, all this economic information and economic data is still going to impact. Alright, in terms of, so sentiment currently is in a risk off environment. In terms of COT report, it's not going to be very relevant for this trading week, right? Simply because once again, if you are not aware, right, COT report data comes in on Friday and it takes in the last Tuesday data, right? So this week data that we actually track is actually last Friday data, tracking on last Tuesday data, and that's before Brexit. Alright, so all this data for COT is not going to be accurate and it's not going to be relevant for this week. Okay, so the whole focus of this week trading is really on the sentiment of Brexit itself and what's going to happen, what's the development in the UK and the Euro side. Okay, so having said that, I'll walk you through some of the technical chart. There's not much in terms of setups that we can identify, simply because when markets move in such movement like this, tendency is the methodologies and the strategies that we use won't be able to give us much of a potential setup. Okay, but the first one I want to walk you through is the euro dollar setup. Okay, this one we are taking in back in terms of a breakout strategy. Okay, so I think for Mitch, if you are in here, breakout strategy might be new to you, because we actually walked this strategy with the other students, the newer batch students. Okay, so the whole idea of breakout strategy is normally we put a pending limit order, but for breakout strategy we put a stop order, pending stop order. Okay, so the whole idea here is euro dollar. Our fundamental bias telling us is that euro is bearish, dollar is strong. Okay, so the whole idea here is we want to write and find a technical setup and write with the fundamental bias that we have. Okay, so naturally if we are bearish euro and strong in bullish in dollar, so we want to look to sell this pair. Okay, so if you look in terms of what's happening, you can see this strong move occur is because of Brexit. Okay, and if you want to start identifying pattern, you can't really see any harmonic or advanced pattern happening over here. Okay, and in terms of trend following, you don't really have much as well. In terms of 1 2 3 4 setups, alright, you can't really see any of those. So what we want to do is we also want to write on the opportunity based on the fundamental bias as well. Okay, so what we want to do is we want to see whether we can take any breakout trades according to the trend. Alright, so in terms of breakout trade, what I want to do is I usually look at the previous low, and I want price to actually break below the previous low before I enter. Right, so that's what we call a breakout, right? Because if price eventually push and break below this low, we are expecting that price will continue its bearish momentum. Okay, so for this pair itself, you guys should have received the signal. Okay, so my entry is over here. Okay, and okay, my stops will be at the previous retracement high. Okay, and my take profit for this, I'll be using the expansion tool. Alright, my first take profit level is actually 1618. Okay, and my second take profit level is at the 200 levels. Okay, so you can see that risk to reward ratio is pretty healthy as well. Okay, it's for first TP is definitely more than 1:1. Okay, this is the ratio. Okay, but if you look at this, right, from entry to stop loss, because of that movement occur during Brexit, right, it's huge. Your stop loss is also huge. This trade, I think the stop loss is roughly about 300 pips. Okay, so if it's 300 pips and you want to properly position, calculate your position size, your trading size, if you are trading a small account like $1,000, you won't be able to trade all these setups. Okay, because if you trade 0.01, the smallest lot size, you'll be risking too much already. Okay, so this one you really need to factor in when such big movement occur in the market. Your setups will naturally be huge in terms of stop loss as well. Okay, so you need to factor in whether your account size allows you to trade all this setup. Okay, so this is one that I'll share with you. The other one that we are looking at is actually pound dollar. This one we wanted it to actually retrace back up first, and we want to short if we retrace back to the 50% Fibonacci with some support level here that it has broken. Okay, but you can see that price didn't really retrace, but instead it gapped down and then it now continue going lower. Alright, so we do expect that Britain pound, GBP to be continue weakening for at least this week and even next week as well. Alright, unless there's any development from the UK side. But if there's no development, we still expect the sentiment to be bearish on pound. Okay, but then the thing is, how come we have this setup in terms of breakout setup for euro dollar but not for pound? Okay, because what I'm looking out for here is that you look at this retracement, it's very tight. It's just next to next right is the next candle right after the drop. Okay, so to me it's not a valid retracement in a way, but if you look at euro dollar, okay, it takes some time before it rally back up. So to me, if this is H1 is actually clearer. You can see there's a fractal forming. This to me is more of a retracement instead of the pound side itself. Alright, so that's why this one I don't trade the breakout. Okay, if I walk you through some of the other pairs, you can see a lot of all these pairs have this kind of candle. Okay, huge movement during the break. When this kind of candle happen, usually we don't have very nice setup, and even if you have a setup, your stop loss will be super huge. Okay, so as a trader, you want to protect your capital and manage your risk first. That's the most important thing. And then after that, you only look out for profits and let your profits run and take care for yourself. What you as a trader need to do is really manage your risk. Okay, so it's okay if you do not trade even for this particular week. Alright, let the market settle down a little bit, let it move whatever he wants, and then after that you come back and reassess the market condition and whether it's suitable for your trading. Okay, if you look at Aussie dollar and Kiwi dollar, these two commodities pair, okay, you can see this drop as well. So this huge drop is really because of risk off environment. One, alright, capital will flow out from higher risk currency, for example the carry trades, alright, like Aussie and Kiwi. And the other contributing factor is because dollar is also a minor safe haven currency, right? So this will cause the drop in Aussie and Kiwi as well. You can see this too. Right, and so because in terms of the fundamental bias, we are neutral on Aussie and Kiwi, and it's best to actually avoid this kind of currency as of now, because once the sentiment shift right from risk off to risk on, okay, money will start to flow back into all these carry trades. Right, so the best thing to do is better to avoid it, because you never know when the market sentiment will just shift back to a risk on environment. Alright, US Canadian, this one we can trade. Why is because we are bullish on dollar but bearish on CAD. Okay, so overall the direction this is, we have a bias towards upside, and you can see this is again another breakout trade. Okay, so you can see this 1 2 3 candle is a valid retracement. So what we want to do is, if price breaks above the previous high, which is over here, this horizontal line that I've inserted. Okay, if price breaks above this high, we actually enter a buy trade. Okay, our stops and take profit level, our stops will be at the previous retracement level, and our first take profit level is 161 and the second is at 200. Okay, having said that, your first TP is actually very far away. If you look at this is about, the price is around 1.31, the take profit is about 1.356, so that's about 460 pips, 450 pips, right? It's a huge movement. It's not gonna be like one candle is gonna shoot up like this. You're gonna take some time. Okay, so how we're gonna manage this kind of setup in terms of risk or trade management is that if price move up in our favor and it hits AB equals to CD, meaning it's a one-to-one movement. Okay, it's a one-to-one movement like this. Alright, so if I show it to you, it's a one-to-one movement. If price hit the AB equals to CD, we're gonna move our stop loss to break even. Okay, basically it's a risk-free trade riding for our first TP and second TP. The risk to reward for this kind of breakout trade is really huge, right? It's at least 1:2. Okay, so we can actually afford to have less than 50-50 win rate but still make money. Okay, so this one, for those who have any questions, right, whenever we meet up for the next session again, when we have a follow-up session and meetup session, you can clarify on this strategy again. Okay, and for those who have like John, Jess, you guys have been following since we introduced this breakout strategy. It's not really forward tested in terms of like really tested, because we are still doing some minor tick here and there, and you can see some differences. So once it's firm up, as in when we have enough number of trades to say that this strategy really work, then I'll actually do up a video to share more about this strategy. Okay, Euro Yen, nothing much that I'm looking out for, but in terms of fundamental bias, alright, Euro is negative, Yen is also strengthening. So the whole idea is that this pair is going to continue heading lower. Okay, but in terms of technical, I do not have a valid setup. Okay, Pound Yen is the same case, similar to Euro Yen, but there's no technical setup. Okay, Aussie Yen and New Zealand Yen, again, I'm avoiding these two pairs simply because I'm avoiding Aussie, I'm avoiding Kiwi. Okay, Canadian yen is very similar to pound and euro yen, but then again, technical wise, I do not see any valid setup as of now. Okay, so I'm not trading this pair as well. Okay, euro pound is tricky because euro we are bearish, pound we are also bearish. So this pair, this currency pair, best is not to touch it. Okay, euro New Zealand. Okay, we are bearish on this because we are bearish on euro. We are neutral on kiwi, so we can actually still ride on this opportunity. But the whole idea this over this setup, right, is that is something that is tricky because if the risk environment shift from risk off to risk on, your kiwi will strengthen further. But as of now, if kiwi continue to weaken, okay, then this pair is a little bit mixed. So that's why this is not technically a very high probability kind of trade, but technical wise it's still valid. Okay, so if you want to take all these kind of trades, right, which doesn't fundamentally align, that means your probability or conviction level might not be as high, right? You might want to reduce your risk. So imagine normally you take 2% risk per trade. Okay, so this one you might want to just take maybe 1% or even 1.5% for this trade itself. Okay, but this trade is a very simple 1 2 3 4 1 2 3 4. All right, so we want to wait for retracement towards the 61.8 Fibonacci retracement, which comes in line with your previous structure level. Okay, euro odd wise, there isn't any, simply because if you put 1 2 3 4 here, and I pull in my Fibonacci, there isn't much alignment over here. Okay, because I see some structure over here, and I also see some structure over here. So instead of not very sure of this pair, I already have euro New Zealand, so I only take euro New Zealand instead of taking both of euro New Zealand and euro odd. Okay, so this topic I think I covered some time back, in terms of how you want to manage trades which are closely correlated, right? One method is that you can take both and then you halve your risk, or you select one which you feel more confident with. Okay, so in this case I'm more confident with euro New Zealand, so I actually take this trade. Okay, but for pound Aussie and pound kiwi, okay, you can see the setup is very similar. Okay, I'm taking a 1 2 1 2 3 4 retracement setup. Okay, Fibonacci 618 aligned with previous structure. Similar for pound New Zealand, 1 2 3 4 Fibonacci 618 aligned with previous structure level. Okay, but you can see right now price has already break my previous low. Okay, so this trade itself might not be valid anymore. Okay, it might be already irrelevant because price has already broke my previous low. Yeah, so these two trade is already irrelevant, so you can cancel the pending orders. Okay, Aussie Canadian, there's nothing much happening. But if you look at this in terms of the fundamental, Aussie is neutral, Canadian is bullish, so this pair should overall should be going up. Okay, but in terms of technical setup, there's nothing much setting up over here. Okay, pound franc. Okay, having talked about this one, right? The Swiss franc currency. I want to avoid all Swiss franc currency as of now. Simply because Swiss franc is actually a safe haven currency, right? It should function similar to Japanese yen. Okay, but what is the difference between why I trade yen now and not trade the franc? Is because SMB actually came in and already said that they will actually intervene the currency. So that's why in terms of Japanese yen and Swiss franc, I would prefer Japanese yen instead. Alright, okay. Commodities, alright, you can see that gold and silver actually rallied. This is a basic general in terms of relationship between risk environment, is that if it's a risk off environment, meaning market is very uncertain, okay, there are some financial crisis, or for example events like Brexit, your precious metals like gold and silver will rally. Okay, so you can see that it actually went up higher. Okay, and for oil, this is one interesting setup that I'm looking out for, is 2618. Okay, we have overbought condition. All right, and you can see RSI after that it went lower, but your price actually went higher. You can see this overbought is over here, and it went higher. So this is actually a divergent setup, okay, and price broke below the previous neckline, okay. So now I'm waiting for a retracement towards 618. This is a 2618 setup, okay. If price comes back up over here, then I'll look to short. Okay, so overall you can see oil is retracing, is going back down. That also affect your Canadian dollar. That's why we are bearish on Canadian dollar. Okay, let me walk you through some remaining pairs, and then I'll see if you guys got any question. We can tackle on those as well. Oh, okay, John. John asked something about franc. Uh, yeah. So John, I actually talked about franc already. So you see if you really understand what I shared with you regarding Swiss franc, why I don't trade it, and see if you understand that. Alright, then I'll tackle that question again if need to. Okay. So in terms of Swiss franc, I mentioned that I do not prefer to trade it as compared to Japanese yen. Because the SMB can intervene just like this, all right, and for those who have been trading the currency market, when SMB intervene like this, normally is what the SMB do is they don't really release any statement or don't warn the market or anything, right? So they decide to just do it, and then I prefer not to touch the Swiss franc during this kind of situation, right? And if you look at those charts with Swiss franc, you can see the movement is like one bar down, the next bar all the way up. Okay, so even for all this pair, you can see one bar down and then the other way, the other bar retraces all the way. So in this way, I don't really want to trade this kind of setup. And if you look at the technical side, it's also very ugly. Okay, you look at Aussie franc, this bar down and then the next bar it went all the way back up. Right, similar to New Zealand. So because of all this, I would also advise you guys to just avoid Swiss franc as of now. Okay, so that means all Swiss franc pair you want to avoid. Okay, look out for Japanese yen instead if you want to trade the safe haven currency. Okay, for Aussie Kiwi, this is interesting because what we are experiencing over here and seeing is a very nice range. Alright, so when price range nicely like that, there are two things you can happen. One is you can drop down to lower time frame and you can spot a lot of advanced pattern, right? Like harmonic patterns. You can spot a lot of it happening over here. Okay, but because I'm trading on minimum H1 and H4, on the H1 time frame, you can see all this ugly candle. Okay, so to me, there's actually no pattern setting up. All right, it's very ugly. If you want to force one in, there's actually one over here. If I'm not wrong, you can take X to A to B, a retracement to 618. This is a potential godly pattern. Okay, it looks something like this. It's not the most ideal one. It looks pretty ugly. Here, I'll pull it to 127. Okay, so exactly over here where I ended. Okay, if you are interested, you can look out for this godly. Right, I won't be trading this because the whole idea is all this, you look at all these spikes up and down, the wicks of the candle. I won't be trading it, but instead I would prefer a setup which is I would say cleaner, and I have more confidence in, which is the breakout strategy. Okay, so when price is ranging like this nicely in a very rectangular box, one is there'll be a lot of patterns happening inside. The second thing is it gives you an idea that you can actually trade a breakout. Okay, so for this pair, I would want to follow the overall larger trend, which is overall is still going down. Okay, so what I'm looking out for is that the chance of it breaking lower is higher. So I'm actually looking for a sell breakout, meaning I'm expecting price to break lower. Okay, so you can see that this red line is actually my entry. If price break this low, I give some room before it break. Alright, and once it break it, I'll actually enter a short. My stop loss is over here at the previous high, and my take profit again is using the 161 and 200. Okay, even though this box seems small, the range itself in pip count is pretty huge. Okay, it's about 165 pip. Okay, so if your account is really small, you will be able to trade it. So but I did calculate it. If your trading account is $1,000, you can still actually enter the minimum, which is 0.01 lot. Okay, so this is the setup that I want to share with you why I actually trade the breakout. Okay, the other way you can do is you can trade the breakout if it breaks above it. Okay, so you can do that as well. But for me, I tend to trade a breakout following the overall trend, which is in this case is downward. So I'm only looking to break below this range. So here, Swiss franc, I'm not trading it because of Swiss. If you look at Euro CAD, fundamentally it doesn't align much in giving you a clear direction because Euro is weak, Canadian is weak, both are weak. It becomes unclear in terms of where it wants to go. Okay, so in that case, I wouldn't even look if there's any technical setup for this case. Okay, New Zealand, Canadian, the whole idea is again New Zealand is weak, Canadian is strong. Both are commodities currencies. I would want to be more cautious as well, similar to AUD CAD. Okay, that's the reason why I also don't want to trade them because New Zealand commodities, Canadian commodities, both are commodities currencies. Uh, Commodities currencies usually react to risk environment as well. Okay, so in that case, I wouldn't want to be trading both commodities currency together. All right. Frank, pound CAD is similar reason to Euro CAD as to why I do not want to trade it as of now, because pound is weak, Canadian is weak. Both are weak. It wouldn't give you a very strong direction. Right. So that's why I want to avoid it. Okay. This is German DAX in index chart. You can see, you know, how such Brexit event can actually impact the equities market. Okay, that's a huge drop over there. It's more than 1,000 points drop. Okay, even the S&P itself, you can see from over here is about 2124. Okay, it dropped all the way to 2000 itself. Right, so that's about 125 points drop. Okay, it's pretty huge. Dollar Sing, there's nothing much over here. Alright, dollar Sing, I'm bullish on dollar as of now because of sentiment drive. Okay, so I'm looking to buy, but setup wise, there's not much I'm looking at. There's only one potential breakout, right, which is over here. This one is a potential breakout. Okay, so I'm looking if price breaks above this previous high, my stop will be below here, and my take profit will be at the 161 and 200. Okay, so this is actually about 245 pips. Okay, I won't be taking this trade because of SGD. I'm not sure how MAS would actually control the Singapore dollar. Okay, so I wouldn't be taking this. If you want to really trade on dollar, trade on euro dollar instead. Alright. If you want to ride on the strength of dollar, ride on euro dollar, ride on pound dollar. Okay. Okay, so this is basically for this week. There's not much in terms of setup. There's not much we can really talk about. But the whole idea here is in this few weeks, alright, or even the next month in July, the whole focus will be on the sentiment aspect of the market. Okay, so I want you to really see for yourself, you know, when such thing happen in the financial market, your technical chart won't really show you much thing. Okay, but that's where we also emphasize why you need to understand how to read the sentiment of the market. Okay, and you can really see it for yourself when such things happen. Okay, do you guys have any other questions? Or Lester, you want to share with them certain things? Yeah, I can see. Uh, okay. I think I add on to dollar sing. Okay, I'll just bring up my chart and I'll show you. How do I do that? Okay, okay, hold on. Okay, let me show you. Okay. I'll add on to Lester's dollar sing, right? So just now he actually identified I think this one. Am I right? Okay. So I think John likes to trade C to D leg. The whole idea about C to D leg is you need to trade based on to me I feel that you need another level of confirmation to tell you to trade from C to D leg lah. Okay, so the whole idea wait. It's not this one, it's too big. Okay, let me clear it It's a smaller one, Okay, I know which one you're referring to. This one. Okay, this one, right? Okay. I think it's a bad pattern. Okay. So to me, right, if you want to trade patterns with C to D leg, right? Yeah, this is a bad. Okay, if you want to trade pattern from C to D leg, you need something more than just if C happen and then you want to just trade from C to D. One thing you can do is I usually take like see you see this as double top and you see that there's a divergence. So you can actually add confirmation to it such that it helps you to filter off when you want to trade the CD leg, when you do not want to trade CD leg. Yeah, so hopefully that helps. Yeah, so help for if John is trading it. So this kind of filter might help you to decide mechanically and consistently when you want to trade the CD, when you want to avoid trading that CD. Yeah. I think just now Lester you were also sharing about Aussie New Zealand, right? You actually have already a trade running. You want to share with them what was that trade about? Oh, okay. Okay, any of you guys have any other questions?
Okay, so the first thing you want to have in a trade plan, right, is your goals, right? Which, to put it short, X% expected returns, and of course, your maximum drawdown, right? So setting a goal for the fund will help you to design strategies that are more aligned to it. Okay, the next thing that you need to do, all right, is to I would say you want to have a filter for your trading time. All right, why do we start with trading time? This is because most of you all probably won't be trading full time, and you all may have to work and all that. So having a trading time filter, all right, to tell you when to trade and how you want to trade it will actually help a lot because it fixes the timings that you make a trade. Okay, so for the purpose of we are going to approach this from a very systematic point of view. Okay, so if you are the kind of trader that trade setups as you see them, then you may not like this. All right, but one reason why I advocate doing this is because by making your trading time very consistent, that's one more you know area that you can actually improve on, right? So if you find yourself trading in the morning, Singapore time, and you don't find yourself really profitable, maybe your strategy would work better in the afternoon or in the evening, when the London or New York session is open. All right, and then you can actually test this part out and see whether it's actually more profitable. All right, we have had a lot of cases from my experience testing out strategies where Friday actually isn't very profitable, and we actually take out Friday from as put Friday, in our trading time filter. So basically, we don't trade on Fridays. All right. The reason being, all right, or one of the reasons we suspect is actually due to gaps, as the price can gap over the weekend, right? And that is not very good for shorter term time frame trades. Okay, so having a trading time filter helps you to keep things consistent. Okay, the next thing is for the purpose of making it more holistic, is to have a filter for market behavior. All right, so there's two types. The market can either trend or range, right? So you need to have a filter or a way of determining, whether the market is in a trend or range. Okay, so that can be, through trend lines, all right, looking at the slope of price. Okay, all right, so one way you can do it is using simple trend lines, simple moving averages, right, looking at the slope of the moving averages to determine whether the market's in a trending position or a range bound position. Okay, so by having a trading time filter, all right, trend and range, the next thing you want to look at is your, what we normally call the ROE, or rules of engagement. So basically how you want to set your stop loss, your TP, right? Okay, so your entry price, stop loss, and take profit levels, right? All these must be fixed. The other thing is, when you might want to move your stop loss to break even, all right, whether you want to employ trailing stops. Okay, and if you are a fundamental trader, all right, what kind of fundamental confirmation are you looking for? Okay, so this can be things like positive data or announcements from the central bank. Okay, so once you have these things, you can start analyzing or preparing your rule of engagement. So exactly how you want to enter, what kind of technical strategies you want to use. All right. Okay. And the next and the last thing that you will do is backtesting. Okay. So backtesting, you involve testing out this strategy of yours, by looking back on the charts. A very good tool to use, that I actually use myself, is a Forex Tester. So Forex Tester, what it basically does is it uses historical data and then it plays it back. It plays back the data, as though it is a live candle, and then you can actually trade as though you are trading live, all right, but it's on historical data. So this is actually good for people who want to, practice the execution of their setups. All right, so if let's say for John, you're looking for entry point at C, from C to D, you can actually test, what if I just trade it from 2000, let's say I trade, euro dollar from 2008 to 2016, right? I backtest it, I trade just the C point to the D point, right? Versus I do it with maybe a RSI divergence confirmation, right? So if you actually take the time to do this, you can see whether adding in this extra layer of filtering, adding this RSI divergence confirmation actually will help you in improving the trading for that currency pair. Okay, so by doing this, you actually get firstly, you get more confidence in how to execute your trades if you're trading manually, all right, and exactly how to approach the setups that you see, all right. The second thing is, of course, you get to see what works and what does not, right? And then once you go into live trading, of course, you need to do journaling, all right. I think we have mentioned a lot of times, and Kayong has also demonstrated, right, how he actually tracks the signals and what are some of the findings that you found, right? Like certain currency pairs that work and setups that work less or more. Okay, so hopefully, you guys will take some time to improve your trading plan by thinking about where it is lacking in terms of maybe your trading plan may lack a time filter or a trend or range filter, or even maybe the things like the break even or trailing stop rules are not really properly defined. All right, so these are some of the things that you might want to implement into your trading plan to make it more objective and more consistent, so that you can track it and find ways to improve it. Yeah. Any questions or anything to add, Kayong?
Uh, Not really. I think. Do you guys have any question? Let me just address this to Florence and Mitch, right? Because the time when you guys joined us, right, we never really talked to you or share with you guys regarding fundamental and sentiment, right? So what we're gonna have is on 9th July. It's actually a Saturday. Okay, 9th July we are conducting this one full day workshop on fundamental and sentiment analysis. So you guys are free. Feel free to join us if you can make it for that day itself. Okay. The timing will be at 10 a.m. to about 6 p.m. Alright. But prepare yourself to stay beyond 6 p.m. Because most of the time our workshop will drag to answer some questions that participants have. This one we are going to conduct it at Mountbatten Square. Right, initially it's at CMC. I think John and Jess, you guys would also be updated by JT. Alright, initially we plan to have it at CMC. Alright, but because we are getting more and more participants signing up for it. Alright, more and more participants are signing up for it, so we are shifting it to a bigger venue at Mountbatten Square. Alright, so CMC can't really take that size in, so just take note about that. If you actually receive a notification from JT itself lah. Right, so I'll just update you guys that on 9 July, right, for especially for Florence and Mitch, right, if you are free on that day, right, do join us so that you get updated as to what we meant, or have a better understanding of what is fundamental analysis and what is sentiment analysis. Right, you guys have any questions? Okay, this week will also be a very tough week to trade, honestly. The whole idea is this event, these things, right, like Brexit is a huge event. It's not gonna be like a 1 day event thing, right? It's gonna be sustained, meaning any new news or new update or new happening, or whatever things is happening, right, it can have the potential to still move the market hugely, right? So the whole idea here is you still want to trade with caution for this week. Alright, so it's not like after Brexit happened and everything becomes normal again. So this is something that you need to be aware of also lah. So what I say is, like, if you still trade, it's okay to trade now, but you just need to be aware that the risk is still there, right? It means the risk of market volatility, market can move huge and quickly in one direction, and then suddenly flip into another direction. These things can happen, so you just need to be very aware when you are trading. Alright, any other questions you guys have? Yeah.
One more thing to add, guys. If you look at the Forex Factory calendar now, Draghi will be speaking at
but they pull out, right? Yellen pull out.
1:30 a.m. I think we have. I didn't see this on the news. Like
Yellen pull out from it.
1 day before.
My internet is loading very slowly.
1:30 a.m. is it?
Yes, 1:30 a.m. It'll be actually a conference lah. It's the EU summit, if I'm not wrong. It's taking place in Portugal. If I recall correctly, the information is at Portugal. But if I'm not wrong, I read this news update that Yellen actually pulled out from it. Yeah. So the whole idea is the question next is do not know what will happen lah, because if the Fed isn't there, I'm not sure what will happen. Yeah, things like this.
Yeah.
Yeah, initially this event is also not there.
Yeah, so just want to point out that you need to check your your calendar source regularly, because when I checked it on Sunday, there wasn't the speeches weren't scheduled in. Alright, so you want to regularly check not just any calendar that you have in your journal that could be offline, but consistently check your data sources, whether it's Forex Factory, investing.com, the economic calendars, to see whether they have any updates of any speeches that's going to happen. If not, you might get caught on the wrong side of the market. Okay? Yeah.
Okay, you guys have any other questions you want to ask? Okay, if not, right, let me see my calendar and see if I can plan time for you guys. Okay, what I'm actually doing, I think I updated all also. We actually opening up something what we call a coaching session. You can see in my calendar over here. I'm toying with the idea that every Wednesday I'm actually opening up for coaching session, meaning if you have any questions or anything unclear, right, I'm actually scheduling, like, putting aside this time to actually have you to meet up if you have any questions you want to clarify and stuff. Okay, and what we'll be doing is every Tuesday we also have this event called CMC sharing. The whole idea is to have a kind of like weekly market sharing with any traders lah. So we'll be actually talking about some of our own insights towards the market. What is some of the potential trades that we can take and such. But definitely it's going to be less comprehensive and less detailed as to the Monday this kind of webinar, right? So this CMC sharing session is if you have any friends that you want to bring along, get them to join you in your trading journey. You can invite them for the CMC sharing session as well. Okay, and then for the Wednesday one, if you want, alright, don't just drop by or last minute tell me, because I'm actually doing it in such a way that I'm actually allocating like each week and to two slots only. That means you can come in group, but what I mean by 2 slots is that from 7 to 8 I'm going to open up for one group, and then 8 to 9 is another group, so that I can be more personal in terms of coaching you guys lah. Alright, so if you are interested, right, do book that time slot with me earlier. Alright, in terms of either 7 to 8 or 8 to 9, so you can come in a group. Like for example, last session I think John and Jess come as a group, so if you want you can come together as at least maybe 2, 3, 4, that will be fine. Okay, and then the workshop one is actually on 9th on July. Just now I shared with you, alright, 9th of July. So that will be 10 to 6 p.m. Alright, this one, any of you who are free and interested, just feel free to join. Alright, that's about it for me for this week. Alright, so the whole idea is again, just be cautious trading the market for these 2 weeks lah. Right, and then I think for Jess and John, you guys have your homework, right? From the last coaching session that we have. Alright, so continue doing that homework, and then I will follow up with you again after a month's time. Right, if I'm not wrong, it will be here. Right, 15th of July. Right, so continue doing your homework, and then I'll follow up with you and update, and from there we continue progress to the next stage and such. Okay, any other questions or things you want to ask? Nope, all good.
Setups, trades.
Okay, okay. I think if it's all good, then we can end this week's session here. Okay, again, this video will be uploaded to YouTube, but only you guys will have access to it. The thing is, I was plugging my earphone earlier during the session. Alright, so whatever Lester say might not have been recorded earlier. Okay, I only realized it when during the part where Lester talk about the important part about trading plan. Okay, so the whole thing is, before that, the video itself you won't hear Lester talking because I plugged in my earphone, so you won't be able to hear him from the speaker. Okay lah, but because you guys are here already, so you actually heard what Lester said live. Alright, so this is more like for the rest who didn't attend this live, probably will miss up some part which Lester mentioned in the earlier part of this video. Okay, that's about it. All good? Okay. Can. Okay, then in that case, I'll end this session here. Alright, then do follow closely in terms of like WhatsApp. You can still keep asking questions and such, right? And then we'll update you if we have any new events and such that's taking place on the WhatsApp group as well. Okay, so with that, I'll just end this session over here, and continue improving yourself as a trader. Okay, any questions, just feel free to ask us.